and therefore we're going to see sustained demand in a way that we're not going to get the crashes like when we just depended on computers and smartphones for all of our revenue. But as the CFO of Texas Instruments told us, that's a dangerous thing to say.
Well,
go ahead, Carol.
Just real quickly, though, is he right? Ian, you've been following, I mean, who are any of us to question the Intel CEO, but you also have been following this industry and understanding how there are more chips in our world, pretty much in everything that we do, it feels like. Is he right, though?
Well, I think the middle ground would be to say that perhaps the diversity that the industry now enjoys compared to the past would perhaps cushion some of the amplitude. But at the same time, can we expect the company's revenues to be going up at 40% a quarter? I think it's difficult to argue that that is sustainable.
So what would you be looking for with Intel earnings today? What are you going to keep your eye on?
Yeah, I mean, Intel is a different case, right? Intel has basically got problems of its own making. So Pat Gelsinger, the new CEO, has come out and said, look, I'm going to sort this out. I'm going to get back, our leadership in technology. But investors have said, oh, great, we like this. But then they thought, oh, actually, no, it's going to cost a lot of money. It's going to take a lot of time. So we'll be looking at how that impacts their margins, how that impacts their growth rates. And remember, world's largest chip maker is the only large chip maker that's going to actually shrink this year, according to estimates.
Jeez. And then meanwhile, I mean, you've got something like,
else.
There's everybody else. I mean, I don't know if TSMC came out and said this, or is there one other company that could also come out and say something that would make you say, well, wait a minute, maybe there is something different, definitively?
I think, the details are, the devil's in the details here, because a lot of companies, don't know exactly when what they sell is going to be used. They're right at the back of the supply chain, which is what the CFO of Texas Instruments said here. So if we see inventory start to creep up, if we see order rates start to slow, then it's usually those are the signs that the tipping point is coming.
Can you just go through some of the other products that we use each and every day, apart from cars and refrigerators that we talk about, that has diversified the revenue streams for these companies? We have about 30 seconds.
There's a chip in my brain, just so you know.
I wish.
I mean, it's actually easy. I think it's easier to name something that doesn't have a semiconductor in it these days. I mean, everything that's to do with the automation of your daily life, but even things as esoteric as pieces of factory equipment are now being connected to the internet and now using AI processing to make them more efficient. It really, there's been a blossoming of use of these things.
You're so amazing. Ian, thank you so much. Really appreciate it. Ian King, he is, of course, our U.S. semiconductor networking reporter at Bloomberg News, joining us from our San Francisco bureau. Check him out on Twitter at Ian M. King. But it'll be big when Intel reports.
Yeah, Intel after the bell today. We had Texas Instruments yesterday. And next week, Carol, is the big week for earnings.
Yeah, I mean, these 2 weeks are like killers. This weekend, you're right, next week is a really, really big one. And hearing from a wide swath of companies. All right, let's get back to world and national news. Nancy Lyons in our 99.1 newsroom in the nation's capital. Hey, Nance.
Hey, Carol, you've been talking about chips. Well, the Biden administration is laying the groundwork to spend roughly $52 billion on semiconductor research and manufacturing, even as it's awaiting congressional approval of the funding. Commerce Secretary Gina Raimondo says we need to act quickly to address the chip shortage.
We need to incentivize the manufacturing of chips in America, and so we are very focused on putting the pieces in place so that can happen.
As part of her strategy, Raimondo has brokered a series of meetings between semiconductor manufacturers, their suppliers, and their customers, including automakers. And senior administration officials say those meetings helped ease some mistrust among them. The White House is accusing China of stonewalling the WHO's investigation into the origins of the coronavirus pandemic. Press Secretary Jen Psaki says China is not living up to international expectations on transparency.
We're deeply disappointed. Their position is irresponsible and, frankly, dangerous.
Psaki says the WHO is still trying to determine if there was a lab leak or an accident at the Wuhan lab where the virus is believed to have originated. China says it cannot share all of the data due to privacy concerns. The NFL says teams with COVID outbreaks among unvaccinated players will be forced to forfeit games if they cannot be rescheduled this season. The team responsible for a canceled game will also be responsible for financial losses. That team may be subject to potential discipline from the commissioner. The league says it does not plan to add a 19th week to fit in makeup games. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You are listening to Bloomberg Business Week. Carol Master along with Tim Stanovic. We have been watching the auto sector big time, partly because of what we just talked about with Ian King, the demand for semiconductors. We heard Mercedes earlier this week talking about the lack of access to semiconductors and how that is impacting what they're able to do in terms of supplying cars. But in the meantime, they're also increasingly leaning into green.
What I was going to say is, when I saw this headline, Carol, everybody is doing it. Mercedes-Benz vowing to spend more than 40 billion euros, that's $47 billion this decade, to electrify its lineup and defend its positions as the world's leading luxury car maker through a historic industry transformation. The company plans to launch 3 new all-electric vehicle platforms in 2025 and set up 8 battery factories with partners. That's what the company said in a strategy update today.
So listen.
That's huge.
For such a long time, it was just a few random electric vehicles. Then Elon Musk comes on the scene and kind of just punches everybody in the gut and says, well, look what I can do, and I'm going to disrupt everything. And then all of a sudden you've seen all the luxury automakers really lean into this pretty aggressively. Mercedes planning to launch 3 new all-electric vehicle platforms in 2025, set up 8 battery factories with partners. The company putting out a strategy update. They are betting the luxury segment will shift faster toward battery cars than the mass market because of customers' greater purchasing power. And I've got to say, we've been holding off and kind of buying a new car for a lot of different reasons, but keep watching what's evolving in the marketplace. And now, as there are increasingly more and more offerings, are thinking about, okay, what's our next car?
It's funny you say that. I was talking to my parents about this recently because they are looking to buy a new car if they can get their hands on one.
There is that.
Sorry,
I don't want the orange sedan.
Well, lots are like empty right now. It's because of demand and because of the chips that we were talking about. But my dad said this will probably be our last internal combustion car.
Yeah. Right?
Yeah.
I mean, it's just interesting in terms of how we're thinking, and I think you'll start to see the infrastructure ramp up even more aggressively, but there's just more and more offerings out there.
There is, and a lot has to do with the regulations that are happening in Europe and around the world with goals of climate goals.
Europe really, really setting the way.
stocks, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Busy day for earnings. Stocks push higher. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bailey Lipschultz.
And good afternoon, Charlie. It's been a very solid day for stocks with large cap tech companies leading the way. The Dow is up 50 points, S&P higher by about 10, while the NASDAQ is up 55 points. U.S. 10-year yield is at 1.26%, and small caps are lower by 20 points. 6 of the 11 main S&P sectors are trading higher, led by gains in tech and healthcare, while financials and real estate are the worst performers. Nasdaq Biotechs rise 10 points, transports dip 15, semis are down about 35 points, while the VIX is lower by 1%. Leaders in the Dow, Salesforce, Microsoft, and Nike, while Travelers, JP Morgan, and Disney are the worst performers. After earnings, Abbott fell as demand for its COVID tests dropped about 40%, and Domino's Pizza jumped to a record after second quarter earnings beat estimates. In deal news, Uber agreed to buy freight firm Transplace for $2.25 billion, and Didi fell 11% after a report China is weighing serious penalties for its IPO last month. Wrapping things up, another busy earnings evening. Look for earnings from Intel, Twitter, and Snap after the bell. Live from the First Word Breaking News Desk, I'm Bailey Lipschultz. Charlie?
All right, we thank you very much, Bailey. And to hear live breaking news over your Bloomberg type Squawk SQUAWK on your terminal line, Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So one of the sectors, we just talked about the chip sector, but we wanted to do a deep dive also into the airline sector because, Tim, we've heard from American, Southwest, they're taking a more cautious view on the third quarter than their rivals. So it's underscoring some of the uncertainty over corporate travel rebound and the impact of that Delta variant.
Well, joining us now is George Ferguson, a senior aerospace, defense, and airlines analyst with Bloomberg Intelligence, joining us on the phone from Bloomberg Intelligence headquarters in Princeton, New Jersey. George, it's great to have you with us. What have we learned thus far from the airlines about how they're viewing demand, especially recovery with business travel? Because as we know, business travel is so important for companies' top and bottom lines.
Yeah, so thanks for having me on. Yeah, well, I think what we've learned is that they don't know on business travel. Right? They've had
surprise.
Pretty nice July. I think they're looking into their bookings for August. They're feeling pretty good about August, and I think they see a dip, mid-August into September on bookings. We know that business bookings typically come in closer to travel, a couple of weeks out. So we don't fully know yet what that booking, we call it booking curve, what it's going to look like.
The Raytheon CEO, Raytheon Technologies, Greg Hayes, was here with us. He's a Bloomberg Business Week Talks in the magazine this week. And he talked with us, George, and, obviously they are very involved in the commercial aerospace. He says he sees a full recovery in business travel in 2024 to 2025. It's a long time.
Yeah, and I've heard that from other some of the airline executives too. I mean, I really think that it may take that long to get all of the travel back that we saw in 2019 from business, but I don't think it's going to take that long to get back the majority of that travel. And I think that's the big difference, right? They're all looking for when we achieve the 2019 level again. I still think you're going to get a nice bounce back in 2022. I think that at the end of this year, we'll see increases, but I think people have to get back into offices. Travel managers have to decide what policies are. There's a number of things that I think sort of get in the way for getting, a lot of that travel back this year. But again, I think 2022 probably pretty good for business travel into 2023. But the final small percentages, I think, take out to mid-decade.
Where are we in terms of people actually getting back to traveling? I was flying for the first time since March of 2020 yesterday and a few days ago, and everything was packed, George. And it made me wonder, are routes where they were at the same time back in 2019? Like, have airlines been able to add capacity at the same rate that travelers want to get back?
Well, so we know that there's been a challenge, adding back all the capacity the airlines would like to add back. We know when we talk to the companies like Southwest, they'll tell you, they've still got some parked fleet. Some of that parked fleet has to go through maintenance before it gets back into the system. Some of the maintainers are having problems getting parts, getting employees to work on those aircraft. So we know that they're not back at full fleets. So that's going to take a little bit of time as well to sort of get all that back in good working order.
So how does the industry, if at all, George, you've been following it for a long time, how does it change longer term as a result of the pandemic, or does it not at all?
I really think that we're going to see an industry very close to what we had in 2019, again, out at mid-decade. But I think until we get there, it will be a leisure-heavy rebound. I still think there's probably more of a trend towards the ultra low-cost carriers. I think you'll see a very price-sensitive consumer. So you see the companies like Frontier and Spirit, they're expanding fastly. I think they'll have some they'll have robust demand. The challenges will be for the other airlines to be able to match them on price, at least on the routes that they're competing against with them, and still get profitability on the rest of their business. But again, I see that leisure, and I still think international is going to be a bit interrupted for, I think, well into 2022.
Yeah.
Just because of the vagaries of different governments deciding when they can, lift certain travel restrictions and it's politically okay. And so that challenge, I think, is going to persist for another, 6 months or a year or two.
So I have to say, I remember one of my first broadcast pieces doing for TV years and years and years ago was just going through the lineup of airlines that were created and that were no more. Is there any airline that you think is at risk because of business travel taking longer to get back?
So in the United States, as you probably know, United, American, and Delta are the big business travel airlines. In this downturn, what I've been very amazed about is the level of government support, and they're all coming out of the pandemic, with a lot of cash on their balance sheet. And I think, while they might not make robust earnings, they can still, probably get cash flattish, right? So they're not burning it, at least, or burning very little. So I think all the airlines in the U.S. really have some pretty good longevity. I don't see a failure in a U.S. airline. Maybe some mergers, but there's very few and far between in the mergers, too.
Cool stuff. Hey, thank you so much. Really appreciate it. George Ferguson, he's Senior Aerospace, Defense, and Airlines Analyst at Bloomberg Intelligence. By the way, airlines as a group, they're up around 10% year to date, up nearly 60% in the past year, and down about 20% from that April 6th high. So they have bounced back.
Yeah, travelers are bouncing back too.
Yeah, including Tim Stenovec.
Yeah, right.
This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed. And it is time for the chart of the day. Did you miss? You missed.
I
Well,
did.
you were
Well,
part
no,
of it.
I was. I was joining. So I joined every hour, and I joined for the chart of the day, the song of the day. But even 1 year listening to it in the middle of the desert, I couldn't name the song.
Kind of tough, right?
I know, it's
There were
tough.
tougher songs, I feel like. Well, maybe not.
Carol, you got them, I think.
I did. I was just going to say sorry.
I think you got them all.
All right,
by my count.
we're going to bring in Dave in just a moment. Let's get back to Charlie Pellet. Charlie, 29 minutes to go to the close.
Indeed, and we are off session highs right now. Right to the numbers. We'll give you the Y in a moment here. S&P up by 6. That's a gain of about 0.1%. In the YTD column year to date, we've got the S&P this year up by 16.2%. The Dow pushing higher, off session higher, is up by 29 points, up by about 0.1%. NASDAQ on the rise by 49, higher by 0.3. NASDAQ 100 index up 0.6%. Russell 2000 lower by 1.4%. Dow Transports down 0.3%. Tough day for a lot of the semiconductor names. Philadelphia Stock Exchange's semiconductor stock index lower now by 1%. Texas Instrument shares, they're down by 5.3%. After the bell, we will be hearing from Intel. We'll also be hearing from Twitter. Right now, Intel's down 0.4%. Twitter is lower by 0.1%. Stocks approaching records, though, led by tech companies. Right now, the 10-year yield, 1.25%. Spot gold up 0.2%, 18.06 the ounce, and West Texas Intermediate crude up now by 2%. WTI 71.72 a barrel. In response to surging caseloads and hospitalizations, Texas is dispatching people to Walmarts around the state to encourage younger people to get vaccinations inside. Data in Texas shows the vast majority of COVID fatalities among the unvaccinated. Dr. Jennifer Nuzzo is senior scholar at the Johns Hopkins Bloomberg School of Public Health.
The Delta variant is spreading much more quickly, and it's potentially spreading a bit earlier in people's illness, possibly when they're not even feeling much. So that complicates things. So the fact that if you're sick and you're out and about, you can infect more people than you would have with earlier forms of the virus just makes it harder for public health officials, to outrun it, to use other measures to try to control it.
Dr. Nuzzo with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine names that we track on a very regular basis. Pfizer up 1.2%. ADRs of its German partner BioNTech up by 8.7% today. AstraZeneca's ADRs up 0.6%. Moderna up by 0.7%. J&J Johnson & Johnson up 0.3%. Recapping, tech stocks leading the S&P 500 gains. S&P up now by 7, up 0.2%. I'm Charlie Pellet. That is the Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg. What's the year on this, Dave?
Right around 1970, if memory serves.
1970.
It was the title track of an album.
It's like the spelling bee where you ask, the etymology.
Exactly.
I got news for you. You're not getting this one.
Okay.
You're just not.
Okay,
We'll
thanks,
cut
Dave.
to the chase here.
Is it a group we know?
Well, maybe not you and Tim, but there are many people who do.
It's a cover.
Good
Is it
answer,
it's a
Dave.
cover?
It is, because it was a Chuck Berry song. And in fact, one that was covered by Linda Ronstadt. I could have used those versions, but instead I went with the MC5.
Yeah, we wouldn't have gotten that.
Motor
Yeah.
City 5 out of Detroit, sort of a seminal kind
Concede.
of punk new wave band.
Yeah.
And you know who produced that?
Who?
John Landau. Is that a name?
Wait, John Landau from Who Does Movies?
John Landau, as in Bruce Springsteen's manager and producer.
We're just, all right, strike two.
Yeah, wow. We're
There
like,
you go.
Okay.
Rewind.
Well, he was a music critic initially, then went into production and did this MC5 record and a few others, and then ended up working with Bruce on Born to Run.
Cool stuff. All right, so how does this come back to your
It's
chart?
all about the USA.
Okay.
And, it's a chart that I originally saw the other day because Liz Ann Saunders over at Charles Schwab posted it on her Twitter feed, which, you go look there in the morning. She puts out a bunch of charts. It's always worthwhile to check it out, at least for me. And what we're talking about here is the S&P 500 relative.
Is that where you go chart shopping?
I'm always looking for inspiration, ideas, whatever.
Okay.
But anyway, the S&P 500 relative to an S&P global stock index that excludes the U.S., but includes all the rest of the world. So you're talking developed and emerging markets. Now, we've seen it a couple of times. The ratio between those two hit a record. I mean, just Tuesday was the second one. And the thing is that, you would consistently seen the U.S. kind of do better than the rest of the world going back more than a decade. But, from September through about February, it was the opposite. I mean, you saw the ratio between the two fall about 10.5%, and it's made a comeback. So it's, the USA all the way again. At least that's what it seems like for stock investors. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Couldn't you argue, though, that because the S&P 500 is regaining this record relative to non-U.S. stock indices, that it's an opportunity to go to emerging markets or outside of the U.S.?
You could make that case, and there are certainly some strategists that have. That, looking at the way things are kind of reverting back to form, if you'd done that a few months ago, figuring that, what was happening then was going to keep going, you ended up not doing so well.
Yeah.
So, it kind of comes back to the strength of the U.S. market reasserting itself, and that's really what the chart shows.
Yeah, it really shows the outperformance, but that's also where the growth has been, it feels like, and so it kind of makes sense. Stock of the day?
Netgear.
Netgear.
Okay. Wi-Fi equipment.
Yeah, I know Netgear.
Yeah, I figured you might, Tim. In any case, you might not have bought much of their stuff lately, though. I mean, certainly it doesn't look like people got the numbers that analysts were anticipating, that's for sure. Netgear's second quarter earnings and sales coming up short of estimates. They talked about higher freight costs. They talked about factory closures related to COVID-19.
Right.
So, kind of familiar themes. And then their third quarter doesn't look so good either. They expect revenue to be no higher than $300 million, and that's about 13% less than analysts' average estimate in a Bloomberg survey. So you put that all together, Netgear was down as much as 15% earlier. It's off 9.7% now, and at its lowest price since November. And the ticker on Netgear, NTGR.
Down.
Netgear without the vowels.
This should have been one of my decliners for today.
Yeah,
it's a good decliner, Dave.
It is a good decliner.
Well, there you go.
Never too late.
Down more than 17% this year.
Just saying.
Yeah.
Yeah, I know.
Well, that's what Stock of the Day is designed to do, highlight noteworthy market moves.
Well, look for Dave's Stock of the Day just after 4:15 p.m. Wall Street time on Facebook, LinkedIn, and on Twitter at @TheOneDave.
Good chart, too, about U.S. performance and leadership in the market. All right, let's get to world and national news. Back to Nancy Lyons in D.C. Hey, Nan.
Hey, Carol, a bipartisan group of senators is closing in on a $579 billion infrastructure deal after agreeing to pay for it in part by delaying a Trump-era Medicare regulation. Senate Majority Leader Chuck Schumer says he's pushing for quick action on that proposal as well as the one funding social infrastructure.
As Majority Leader, I have every intention of passing both major infrastructure packages, the bipartisan infrastructure framework and a budget resolution with reconciliation instructions before we leave for the August recess.
Schumer lost a procedural vote yesterday on the infrastructure plan. House Speaker Nancy Pelosi is defending her decision to reject 2 of the 5 Republicans that Minority Leader Kevin McCarthy named to the investigation of the January 6th riot at the Capitol. McCarthy says eliminating them makes the probe a sham.
With Liz Cheney the only Republican member, the Speaker said the committee was hiring staff and would hold its first hearing next week.
The 2 people that I excluded made statements and took actions that just made it ridiculous to put them on such a committee seeking the truth. And we will not let their antics stand in the way of that. We're there to get the truth, not to get Trump.
Pelosi said the committee would look into how the invasion was organized, who paid for it, and who messaged to get the people to come. In Washington, Irv Chapman, Bloomberg Radio.
The Biden administration is imposing new sanctions on Havana following the recent crackdown on protests there. The president says they'll target the head of the military and a division of Cuba's Ministry of the Interior. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. We talk a lot about inflation, transitory or not.
I know where you're going with this.
Well, if you're looking to buy maybe a penthouse in Manhattan or Hamptons home, yeah, there's some inflation going on.
Wow. Penthouse at Manhattan's 432 Park listing at $169 million. The asking price, Carol, almost double what the buyer paid in 2016.
Here's what you get. 6 bedrooms, 7 baths, overlooking Central Park. It was bought.
That sounds nice. I'll take it.
There's a room for each of you and then some. Bought for almost $88 million back in 2016. It's 8,255 square feet of living. It's being offered along with all its furniture and artwork, of course, according to Street Easy. And
sounds like a great deal.
That's what they call it.
I'll take it.
Is that turnkey?
Yeah, turnkey. It comes with art and
Turnkey
furniture.
comes with art. Turnkey on different levels, right?
Yeah.
This isn't just you don't have to paint or redo the kitchen. This is it comes with art.
So this building is almost 1,400 feet high. It's a skyscraper really close to where we work at 57th Street and Park Avenue. So, Carol, the commute would be really easy if you bought it.
Climate-controlled wine cellars. Okay, John, I think we have to move. A library, private restaurant. Private restaurant?
Yeah, in the
Private
building.
Restaurant?
In the
Okay.
building, yeah.
A screening room.
But think about those common charges.
You know, as my mom used to say, if you have to ask, then you can't afford it. The other story is Hamptons home prices reaching a record high. New Yorkers stepped up their bidding for a dwindling supply of listings out in the Hamptons. Median price of homes changing hands in the second quarter, jumping 30% from a year earlier to $1.405 million, the highest in data going back to 2005.
Yeah, for many city dwellers who may have gotten a taste of working remotely in a home with a yard and rooms to spare, the suburbs are holding new appeal for post-COVID life when commuting to the office may no longer be a 5-day-a-week requirement.
Wah. Available listings in the Hamptons plunging 43% from a year earlier, the most on record. So good luck if you're looking for a home in the Hamptons.
Good time to be a seller.
Yeah.
But then where are you going to move?
Yeah, right. Well, there's a penthouse for sale.
That's true.
Just going to say, you're listening to Bloomberg Business Week right here on Bloomberg Radio.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. 13 minutes until we get the latest quarterly results out of Twitter and Intel. Twitter shares up now by 0.3%. Intel, a lot of weakness in semiconductor land today. Intel shares down by about 0.5%. Texas Instruments disappointing Wall Street last night. TI lower now by 5.3%. Stocks, though, pushing higher ahead of the close here with the S&P up 9, a gain right now of 0.2%. Technology companies leading the way higher. The Dow up 43, up by 0.1%. Nasdaq up 47, higher by 0.3%. Nasdaq 100 index up 0.6. Russell 2000 on the minus side by 1.5%. Dow Transports down 0.2%. And the SOX, the Philadelphia Stock Exchange's Semiconductor Stock Index, lower now by 1%. 10-year up 10/30 seconds, 10-year yield 1.25%. Gold, spot gold up 0.2%, 18.06 the ounce. And West Texas Intermediate crude rallied 2% today, 71.71 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
We've just got about 10.5 minutes left in today's...
Wow, Carol, time flies. I forgot how quick that came up.
Exactly,
Gone
right?
for a few days, and suddenly it's the market close.
Well, wait. How did that happen? Let's get to it. Drive to the close with Matt Forrester, Director and Chief Investment Officer for Lockwood Investment at BNY Mellon's Pershing. Matt with us on the phone from Pennsylvania again. Hey, Matt, how are you?
Hi, Carol. How are you?
Doing well. Interesting week, sell off some nervousness in the market on Monday, worried about the Delta variant, worried about slowing or peak economic growth. And then Tuesday happens and it's like Monday never happened. And then Wednesday happened and it's like really Monday never happened. And then there was today where markets were kind of struggling to find some definitive direction. Feels like we have a little bit more of it right now, but I'm almost wondering, are we already counting down to the deluge of earnings next week and then that Fed meeting?
Well, sure. It's not really too surprising to see confusion and cross currents and this week as the markets hit these transition points to slower growth and potential policy changes as we go through the year. Obviously, the Delta and Lambda question is something that we'll definitely have to face, and I think probably will come up with the markets again. And just in terms of rates, right, we've seen, real decline in interest rates that's continued even while we've had the equity markets rebounding from where we were Monday. But it's just important to remember that U.S. interest rates are more sensitive to the global picture than maybe just the U.S. Economic picture. So not too surprised to see, rates continue to decline as we see countries like Australia in 50% lockdown. So still a lot going on as the globe tries to recover from COVID.
So we're obviously, I think for so many Americans, they thought that we were on the other side of this, especially if they've been vaccinated. And now we see what's happening here in the U.S. with the Delta variant and also what's happening around the world. It's not the case. Do you think markets are taking that into account? We kind of saw that happen on Monday, but that's like way in the rearview mirror at this point, Matt, with the S&P 500 and the Dow.
Like
What's that?
I think most market strategists felt that COVID was kind of behind us. And suddenly we get this resurgence on Monday. I do think there's a lot of questions about how the markets were technically set up for some kind of correction on Monday, and just needed an excuse to make some temporary market corrections. But it's all in the rearview mirror, and it's in the rearview mirror to an extent because we've had these kind of surging forward EPS estimates, and that's occurring at a time when, a lot of economists are really looking for a deceleration as we get into the next couple quarters of growth. So it does raise the question of whether analysts are getting a little too optimistic about what they see in forward earnings coming, but it still seems like the recovery is very much intact, and it's going to be a deceleration from higher growth rates to lower growth rates, which is not all that bad for equity markets.
I guess the big question is, right, Matt, when we think about it, is how much of the bounce back that we've seen is just getting back to where we were pre-pandemic? How much of it is also taking into account expectations of even more growth to come the rest of the year? I guess that's where what we have to think about in terms of valuations.
Yeah, for sure. And, things like other things that have happened today, which are the most interesting action today was actually in the commodity pits, where we see coffee at a 6-year high, and, coal at a 52-week high. We see, lumber kind of bouncing back off the bottom. So we've had a tremendous decline in where lumber has been. It'll probably take a long time for it to recover. But, all on supply issues, whether that's Brazilian frost or drop in European wind power or forest fires in Canada, all these things that are, related to climate have been affecting the supply side. But it doesn't help the inflation story. And so, it does raise questions about, what is transitory and what does that mean for markets? And are markets aligned differently to the word transitory than the Fed may be? And I think that's maybe the most important question is, we've heard some economists and some policymakers say they think it's going to be a couple months, and I'm not so sure that that's the right expectation. Maybe it's going to be longer than that, given some of these other concerns to pricing.
Okay, well, I want to get to the Fed in just a minute because we are, of course, going to hear from Fed Chair Jay Powell next week.
Sure.
Time flies, like I said. It's surprising that we're hearing from him again. I do wonder, though, about earnings because we're smack dab in the middle of it. Next week's going to be huge for earnings. This week is pretty big. After the bell, we expect to hear from Intel, Snap, Twitter, Boston Beer, among others. What have you learned thus far? Expectations? Are you seeing companies deliver results that are justifying these valuations?
Yeah, so far I think that's the story, and I think that's why markets have rebounded. And I think we're getting to a place where earnings are going to matter more for markets. So, we've seen over the last couple of quarters, companies meet elevated expectations, and stocks weren't necessarily rewarded for that. And now I think there's more of a delineation between companies that are doing well that aren't. I mean, you've seen some tech companies kind of disappoint a little today, and they're actually getting hit in the market a little more than others would. So I think earnings are going to start to matter, and I think the forward expectations are really going to start to matter because we absolutely need to see the earnings come through to justify these really high valuations in stocks, and particularly for some of the market leaders.
Is it likely we're going to have some kind of taper tantrum? Or, the Fed has gotten pretty wise about managing expectations and spoon feeding changes in policy, and we have to
tantrum, spoon feeding. It sounds like we're a bunch of babies.
Meet the investor, the toddler. But at some point we want that to happen. It's a reminder that things are getting back to normal, that the economy can manage on its own. That's a good thing.
Yeah, well, there's no way that their neutral policy rate, or this concept of R-star, is anywhere near their policy rate is today. So we're going to have to begin that adjustment. I think any Fed communications period that we see from here, into the fall is going to start setting the measure for what we can expect the Fed to do at some point in time. And I think they're going to take their time, and because they're worried about a repeat of what happened in May of 2013, where we had an 85 basis point backup in real interest rates and really set virtually all asset class on their head for a while, about 6 weeks. And unfortunately, right now, we're positioned rather poorly for that. And we have these incredibly negative real interest rates across the entire U.S. interest rate complex. So, I think that's going to be a challenging adjustment for markets, and we could see, a significant adjustment when this taper actually occurs.
Predictions for end of the year. Are we going to see a sell-off in the second quarter? in the third quarter, fourth quarter, second half of the year?
We're so overdue for, some kind of a pullback in equity markets, particularly, the average drawdown in an equity in a year is 14-15%, and we haven't gotten anything close to that this year. So I think you almost always have to have that expectation in the back of your mind, and you have to remember that we're going into the typical kind of August seasonals, which are not particularly favorable for markets. So I think it's a base case expectation. You have to be ready for some volatility as we go into the fall. particularly with all these issues around Fed policy and policy adjustments coming up.
Right, Matt, we've seen this movie before, right? We see some sell-off in the summer. We see a run-up. We see a little bit of a pullback or maybe even a true correction, and then we kind of resume the move upward into the later, months of the year. So we'll see what happens. Hey, Matt, thank you so much. Matt Forrester, he's Director and Chief Investment Officer for Lockwood Investment at BNY Mellon's Pershing. He is with us on the phone in Pennsylvania. And in a day where we've been bouncing around a little bit, it looks like we're going to finish, Tim, just off our highs of the session, but still up only about 8 points on the S&P 500. Dow up about 25, call it unchanged on the day. NASDAQ, the outperformer on a percentage basis, but just barely up 50 points, up 0.33%. Coming up next, we'll be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, counting you down to the closing bell on this Thursday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs, counting you down to that closing bell, here to help take us beyond the bell. Carol Master, Tim Stenovic, bringing together our Bloomberg radio, television, and YouTube audiences worldwide to parse the crucial moments of the day. And Carol, I was just telling Caroline and Taylor about the fact that you go back to that record high that we hit back on July 12th. We had that 3% drawdown. We've almost erased all of those losses here over the last couple of sessions.
Yeah, we just continue to grind higher despite concerns about the virus, despite concerns about economic growth peaking. Got to say, watching this market trade, those big tech names, and we're going to get a big one after the close, Intel, they continue to really provide some support, Tim, for the market.
Yeah, I mean, it's interesting because a lot of the day, it really seemed like there was a real lack of direction until this afternoon when we started to see stocks move higher in the S&P 500, taking a leg up later in the day. Interestingly enough, to that point of big tech actually...
Okay, traders. It was a good day for traders was trading Canadian dollar. We closed trade. We made 10 pips. It took us, as you can see, from 7:30 right now in London, New York Stock Exchange and Dow Jones closed for today. The Forex, if you've been trading for quite a while, will be open for 1 more hour. Then will be reallocation of assets for a couple of hours, British time until 12 o'clock. So all banks probably will remove some assets, will remove to another banks. So let's say it will be break for 2 hours, and then from 12 o'clock, the Forex go back to trading day. In the meantime, we made a profit. In our case, we made £1,000. We started 7:30 UK time. We closed at 9 o'clock. All of you guys who follow trade, who copy this trade, well done. You did really well. We was patient, but it paid off. Yes. If you trade on margin, you know how much you make already. And before, of course, you invest in any stocks, shares, you need to find out how much broker pays you per pip. This way, you will understand 10 pips, how much will give you profit in this case. In our case, 1 pip equals £100, so 10 pips equals £1,000. Stay safe, guys. Let's move on. I can see right now, after closing bell, euro moved down a little bit. So maybe we'll have an opportunity to trade euro. Japanese yen, I can see. So stay with me. Stay with me. Well done. And I'll speak to you later. Good luck, guys.
Now, that's a decline of 9.1% year over year, but it's above what the street was looking for. The street was looking for about $5.94 billion. And remember, this has been the real weak spot for Intel here. This is where AMD has really been eating its lunch, and a lot of investors really wanted to see a little bit more strength there. I guess you can call it strength. Again, down 9.1%, but higher, Tim, than what the street was looking for.
Yeah, Intel had been expecting earnings around $17.8 billion, so this one, a nice little beat here. Shares higher now by 2.8%. 1.5%. This is a turnaround story. What's the update on the turnaround here? The company's spending so much money, especially here in the United States. How is that going to affect margins? How is that going to affect growth?
And profitability, and the numbers coming out for their full-year adjusted earnings per share will be about $4.80, so says Intel. They had previously seen $4.60. The estimate was for in line with that, so they're managing to upgrade not only their revenue guidance, but their overall bottom line guidance as well. This is a turnaround in the server chip unit, what investors wanted to see. But also remember, Intel, the PC market is still the biggest provider of sales, Romain.
Yeah, absolutely. I mean, of course, a lot of investors last quarter, remember, we were sitting in the same seat, and they actually sort of poo-pooed that because they were like, well, it's still PCs, right? Eventually, that's going to run out. But you talk about the turnaround, guys. I mean, we should point out, Pat Gelsinger's been there for like 5 months. He took over in February. You got to give the guy a little bit of time here. So it'll be interesting to see what he says on the call about his strategy for that turnaround, Taylor.
At least within the press release, saying it's all about innovation and digitization and improvements in efficiency. We joke about the PC business, but the press release saying PC and mobile businesses achieving record second quarter revenue. In the second quarter, their PC platform volumes were up 33% year over year, and Mobileye closed 10 additional design wins. So really highlighting, of course, that big business for them.
Is this all like Minecraft? I feel like that's all it is. I'm like, my son wants he needs a new computer for everything. I don't get it. Like, I thought a computer was like an all-in-one thing, but apparently you need one for Minecraft, one for this.
Hey, let's go, though. Let's look at Intel shares again there, because they're now up about 1.3%. So we're seeing some of the trade in the after hours, some of the enthusiasm, the initial enthusiasm being kind of tempered back. Remember, this is a company that, as Tim mentioned, it is definitely going through kind of a resurgence, redefining the business, looking to develop their own chips, but also be able to be a contract manufacturer for other companies. And in order to do that, they've got to spend a lot of money. And that's maybe what can also make investors a little bit nervous going forward.
Yeah, I should mention, Carol, that we are awaiting Twitter. We're waiting Snap. We'll bring those numbers to you as soon as we get them. One point that Ian King made on our air just a little bit earlier today is that the idea of the PC market dominating and being, the most important business for the company, there is increasingly diversity when it comes to what uses chips, right? We talk a lot about cars using chips, but it's pretty much easier, as Ian King said, to say what doesn't use chips rather than what does use chips, because so much of what we interact with and use each and every day actually has chips in it.
Talking about their scale and renewed focus, Pat Gelsinger talking in the press release on both innovation and execution. I want to know, I'm sure plenty of people asking about their acquisition focus as well, because I was speaking to Global Foundry CEO a little bit earlier in the week, and remember there was a big report that Intel was eyeing up that particular asset, willing to spend up to $30 billion on it. That CEO, Global Foundry, pushed back, said, no, we know nothing of this at the moment. There's nothing in it. But the question is whether Pat Gelsinger is also going to be looking at acquisitions in some way to be beefing up their focus and indeed chip manufacturing.
Dare I say it, I am poo-pooed again by the lack of, commentary that we were looking in a 2-page press release instead of a 40-page slide presentation that sometimes we get from the other companies. Really, again, just sort of highlighting, Carol, sort of the basics of the business, and then, of course, saying tune in to the earnings call.
Yeah, absolutely. And there are going to be a lot of questions for him about the spending and going forward. And everybody wants to know, where are we? These are, the semiconductor industry, you do see the booms and busts, right? There's a big lead time. And so you've got to make investments in terms of in factories. These are not things that you turn around very, very quickly, Tim. And so this is where things can start to get a little crazy. Twitter coming out, Romain.
Yeah, Twitter crossing the wire right now here. The numbers look pretty good. Actually, having a little trouble pulling them up here.
Daily active users 206, just slightly ahead of estimates of 205.9 million. Third quarter revenue 1.22 to 1.3 billion. Also remain ahead of some of the expectations that we were getting.
Yeah, and I mean, this actually is pretty good. I mean, the street was looking for about 50% growth here on that revenue number, 1.22 billion, roughly here. 1.2 billion on 2Q revenue. We should point out the 3Q numbers. This is their forecast for revenue going forward here. They're given a range of 1.22 to 1.3 billion. That's slightly higher than what the street was looking for here. It'll be interesting to see how some of the data licensing businesses went, as well as some of the monetization efforts here, because that's always been the knock on Twitter, that you did have some decent revenue growth, you did have EPS, but you really didn't see the type of monetization that you were getting out of Facebook, out of Snap to a certain extent, and even Pinterest, guys.
Yeah, shares of Twitter popping in after hours, trading higher by just about 6%. Jack Dorsey saying, quote, as we enter the second half of 2021, we are shipping more, learning faster, and hiring remarkable talent. For example, our increased shipping cadence contributed to reaching 206 million average monetizable DAUs in Q2. That's up 11% year over year and 3% quarter over quarter. There's a tremendous opportunity, Caroline, to get the whole world world to use Twitter. I want to hear more about
The whole
product
world?
innovation. Yeah, well, look, they've been trying for years to get the whole world
all
to
right,
use
good
Twitter.
luck.
And that's been one of the challenges with Twitter, right? The problem.
Yeah, 200 million daily active
Right,
users is nowhere near the 3 billion that
exactly.
Facebook has, and nowhere near the 8 billion people that live in the
Right.
world. But I'm looking at advertising revenue, up 87% year on year. So they are like luring in the advertisers, it would seem, overall, Romain.
Yeah, I mean, anyone who's been on Twitter lately knows that the advertisements have gotten out of hand. I do want to point out here, you're looking at the shares right now at $75 here. They did get up to $76.70. We should point out that record high is at $77.66. And remember, they've had trouble getting back there. I think they set that back in early March. So there's been some concern about Twitter not really being able to claim that record high. Obviously, it's not clear if these gains are going to hold into tomorrow. But if they do, they actually have a shot here of getting back to that record high, guys.
Well, and you also want to hear about, its other platforms. It's paid content subscription platform called Super Follows. We want to know about what they're doing there. Also, it's Twitter Blue service and its email newsletter review. I mean, this is a company that's been expanding and looking for new revenue lines. So we want to know what else that they're doing, Caroline.
But Fleets didn't work, right?
Yes.
I was only just getting into Fleets. I started to put up my videos on there, and then they told me literally that day that they were going to be scrapping it. So, I mean, that was clearly an area that they weren't loving quite so much.
That was the problem, Caroline. You weren't fleeting enough. It
They
was
just
too
needed
fleeting.
to wait for me, right?
Yeah,
I
they're still
sadly
fleets
don't
are
think
still available, so you can still do it for a little bit more. But the thing about Twitter is that the core product, unlike Facebook and Instagram, if you think about the way that those products have evolved and changed, Twitter's core product, it really hasn't evolved and changed. And we think about what Twitter's trying to do with Twitter Spaces. It's this Clubhouse-like competitor, right? When was the last time any of you were thinking about Clubhouse or getting in a Clubhouse? So it does seem.
those.
Sorry.
Have you been doing any of the spaces? Because they're kind of fun to do.
They're really fun, but it doesn't seem so sticky. It doesn't, when it first launched, it was like this thing that everybody was doing, and same with Clubhouse. And it just seems like that energy has gone away a little bit. And I wonder about Twitter's core product. They had that big meeting earlier this year that talked about the way they were going to evolve the product to cause the company's stock to go higher. When are we going to see that if Fleets didn't work out, for example?
Taylor, I'm actually kind of disappointed that Tim didn't do a Spaces.
Spaces. Well done, Romain. Look at that alliteration.
There's still time.
It's not too late. It's not too late.
Spaces. I just give you further comments, of course, on the outlook, talking about, again, thinking that expenses are going to grow, but still hoping that revenue grows faster than expenses as we think about full year 2021, and just hinting that they are still continuing to see modest impact from the rollout of the changes with the iOS 14.5, but again, hoping to get through those with the pandemic. Carol.
Well, guys, a tale of two tech companies, because Twitter's up more than 6% in the after hours on that third quarter revenue forecast. Intel, though, now just up about 0.9%. So a very different
Keep an eye on
story.
Snap. We'll see how that compares.
It's already rising after hours.
There you go. All right, that's going to do it for our cross-platform coverage here on Bloomberg Radio, Bloomberg TV, and YouTube. We'll see you again, same time, same place tomorrow.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, everybody, we've got the names that we're going to be following into the Friday trade. Twitter among them, up 6.3% here, up as much as 10% after third quarter revenue forecast beat estimates. Snap now crossing second quarter revenue, $982.1 million. That's a beat. $846.9 million is the estimate. And I think Caroline had just said that we did see Snap higher in the after hours. Yeah,
no, we're not seeing that.
It's up now 8% now in the after hours following its earnings coming out as well, Snap. Yeah, so it's really moving, right? And then you've got Intel just up about 0.5% now. So it has tempered back and really pared back some of its earlier gains in the after hours.
Yeah, still waiting on numbers from Snap, but so far this year.
No, they're here.
Oh, Snap are here.
Yep, revenue is a beat. Sees third quarter revenue of $1.07 billion to $1.09 billion. Excuse me. That is far outpacing the estimate of $1.01 billion, which explains why you're seeing that stock snap higher in the after hours. Pun intended.
Wow, look at that. Yeah, Snap up more than 25% so far year to date. Still moving higher, up 9%, Carol.
Yeah, really a big move. And that'll be definitely something to maybe provide some momentum into the Friday trade. I'm going to be off. Have a good day tomorrow.
Thank you. You too. Bloomberg Business Week is brought to you by Witham, a forward-thinking advisory and accounting firm offering industry expertise and innovative solutions for your business. Experience the Witham way. Innovative, adaptive, effective, trusted. Visit witham.com for more.
All right, now to world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol, the White House says COVID-19 vaccinations are increasing in states that have been hit hard by the Delta variant. Coronavirus coordinator Jeff Zients says several states with the highest proportions of new infections are seeing residents get vaccinated at a higher rate than the nation as a whole. He singled out Arkansas, Florida, Louisiana, Missouri, and Nevada.
People in these states are feeling the impact of being unvaccinated and responding with action.
Zients says they're sending $100 million to rural health clinics to support vaccine education and outreach. The work of the new January 6th House Committee will move forward despite Minority Leader Kevin McCarthy pulling his Republican picks from the panel. He took the action after House Speaker Nancy Pelosi yesterday rejected 2 of his selections. Pelosi today said she rejected Congressman Jim Jordan and Jim Banks because they voted against certifying the election and spread misinformation.
It is my responsibility as Speaker of the House to make sure we get to the truth on this, and we will not let their antics stand in the way.
Pelosi says she may appoint other Republicans to the panel to join Wyoming Republican Liz Cheney, who's already been selected. Jill Biden is in Tokyo on her first solo international trip as First Lady. She's leading the U.S. delegation to the Olympic Games. Those games will start tomorrow with the opening ceremonies. During her trip, Jill Biden will be spending time with Japan's Prime Minister and his wife, as well as Emperor Naruhito. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Now back to you, Carol.
All right, Nance, thank you so much. Let's get a check on your top business headlines. A lot of it has to do with a slew of earnings after the closing bell. Charlie Pellet's all over it. Hey, Charlie.
Yep, indeed, a slew of technology earnings. First of all, let's begin with Snap, company you guys were just talking about. Second quarter revenue, $982.1 million. Beating estimates there, $846.9 million. Twitter said it sees third quarter revenue in the range of $1.22 billion to $1.30 billion. Estimates had been for $1.17 billion. Shares up now by just about 5.5%. Intel raising 2021 guidance sees revenue at $77.6 billion. That's up from $77 billion. Shares after hours up now by about 0.4%. A move higher for stocks today with the S&P notching its biggest three-day advance since April. Gains, however, paled in comparison to the previous 2 sessions. Giants Apple, Microsoft, and Amazon all rallied today. S&P up 8, higher by 0.2%. NASDAQ up 52, a gain of 0.4%. The Dow up 25, up by 0.1%. NASDAQ up by 0.4%. 10-year up 6/32, 10-year yield 1.26%. Gold up 0.2%. 18.06 the ounce. West Texas Intermediate crude up 2.1%. 71.75 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I'm going to rehash some of what Charlie just went through because, listen, it is all about right now earnings in a big way. And we just had 3 big ones after the closing bell and getting different stock reactions. Some of the newer FANG social media companies, Twitter among them, rallying big time. Twitter shares are up about 6.8% here in the after hours as we speak, following their latest earnings update. And let me just rehash, jumping after their forecast tops analyst estimates, specifically that third quarter revenue forecast. They're now looking for $1.22 billion to $1.3 billion. What the street was looking for was below that, $1.17 billion. So that is a strong forecast. The forecast is really because of a bounce back on ads. That forecast for the current quarter exceeding global expectations. A lot of events going on around the world, such as the Olympics, are driving advertising. Revenue, as I mentioned, I just came out with that, so that's a big beat. Second quarter sales, just looking back, jumped 74% to $1.19 billion from a year earlier, compared with analyst estimates of $1.06 billion. So that is a big beat. Twitter added 7 million new users in the second quarter from the previous period, bringing the company's total audience to 206 million daily users. Kurt Wagner follows the space, follows technology for us here at Bloomberg. And he joins us right now from our bureau in San Francisco. This is a big deal.
Yeah, it looks good, and you have to keep in mind that this is a bit of a example of how bad things were for them actually a year ago.
Good point.
Now, right in the middle of the pandemic. They are a big brand advertising platform. So a lot of those big brands that were suddenly no longer spending, that impacted Twitter. So some of these numbers look really great in part because they're, going up against a quarter that was pretty bad. But at the same time, they beat expectations. And to your point, they think third quarter is going to be strong as well. So I think those two things combined are certainly helping with the stock.
Well, and what's interesting is, too, and I know your reporting specifically, you've talked about how they've been pushing more aggressively into direct response advertising. So those are the types of ads that try to drive specific outcomes. And so that's been a good move for them.
Yeah, I think that that's something that people are excited about because that's really the bread and butter for the Facebooks and Googles of the world, which are, these much larger ad platforms, right? And if you are Twitter and you're already getting kind of the Coca-Colas of the world, but you're missing out on a lot of those smaller mom and pop businesses, the smaller retail businesses, that's a big opportunity for them. So I think there's a lot of optimism that they'll figure out how to kind of do that. Now, some of that's complicated by the fact that Apple is making it difficult to collect some of that targeting data these days.
Right, yeah.
But, this is something that's a big opportunity, I should say, for Twitter.
They're also expanding, right, in terms of the types of offerings on their platform. It's still, early in the game when it comes to that?
Yeah, I think so. I mean, it's early in the game and that, they don't have as much as they probably should. But at the same time, Twitter's not a new company, right? So they're behind in that they should have probably done a lot of this stuff years ago. But it's early in that there's a lot of room for them to grow.
It's interesting, too, and I kind of was comparing old tech, although really important tech, like an Intel, with Snap and Twitter that are coming out. I mean, Snap's up about 12.5% in the after hours. Are we seeing a maturation, Kurt, in terms of some of these social media companies?
Well, I think that there's a lot that has changed over the last 5 years since Snap went public, where just so much more of life has moved online, especially commerce. And we definitely saw that over the past 12 months, accelerated even more. So I think when you just look at kind of user behavior moving in that direction, and then these companies, being well positioned to capitalize on that, I think that, yes, things have definitely matured, and it's a combo of not only the companies being, better positioned, but also just the way that people interact online these days.
Well, it's fascinating to watch these stock prices climb in the after hours. Snap up 13%, and you've got Twitter up just shy of 9%. Kurt Wagner follows the tech scene for us here at Bloomberg News. Kurt, thanks so much for jumping in on those earnings. Want to bring in another member of our team, Mandeep Singh. He is Bloomberg Intelligence Senior Technology Analyst. See what he has to say about these quarters. He joins us in our Interactive Brokers studio. Twitter and Snap both just off the charts.
Yes, this was a blowout quarter for both. And I feel like everyone sort of expected this simply because the engagement levels were so high on these platforms. And when you look at the secular trends here, e-commerce pull forward during the COVID, everyone buying online. Advertising is an integral part of e-commerce. So all these e-commerce vendors were spending their marketing dollars on these platforms, and they could see the ROI. So in Snap's case, anyone who targeted 18 to 30-year-olds, the advertisers were just flocking to show ads on Snapchat, and that is what is reflected in the numbers.
Mandeep, those are things that probably don't change, right? I mean, we've talked about the retail environment, e-commerce environment. It's still a small slice of the overall retail pie, but it grew a lot or got a real jolt because of the pandemic.
It did, and I think the derivative effect of that is the advertising, the online advertising, and you're right, this will not go away, once the reopenings take place. We feel this is a secular trend, and all these platforms which have high engagement with their user base will continue to benefit because the ad inventory is more useful for advertisers, so they're going to bid up the prices for the ads on these platforms, and it's reflected in the ad pricing numbers.
Snap and Twitter, though, they are not apples to apples when it comes to social media platforms, right? Isn't that safe to say?
Correct. So Snap is more focused on that, younger demographic.
Right.
They are really the category leaders when it comes to augmented reality, so that has really helped them. In case of Twitter, it's more focused on politics and live events. And so they cater to a different audience. And for the longest time, everyone thought it would be a duopoly. Google and Facebook will run away with the market. Guess what? You've got competition, and these companies have established platforms now that will continue to grow.
Well, so has Twitter become an adult now? I mean, it's been around for a while, but how many conversations have we all had about they were struggling, right, to kind of, everybody loved it. Those of us in the media world, we love to be on it, and yet they were struggling to kind of find their way in this social media world. Sounds like they're figuring it out.
Yeah, so they had product issues, and now they are definitely showing better execution. Whether it'll be consistent every quarter, it remains to be seen. But I think the trends are favorable for them.
Why were there such low expectations though going into this? Was it because of what was going on, the comparisons a year ago? What was it?
I think in case of advertising, everyone ties it to GDP growth, and those estimates, were coming up. But what I think investors missed was the connection between e-commerce and advertising. And that's becoming more and more obvious now that if you want to invest in e-commerce, you have to invest in online advertising.
Here's some more numbers. One small number, not so great. This is our Kurt Wagner, who's just on with us, saying Twitter's U.S. audience fell by 1 million users in the second quarter. It has 37 million users in the U.S. now, down from 38 million last quarter, but up from 36 million a year ago. 36 million, it kind of compares to some of the other social media platforms that are out there, but it's a decent-sized audience.
It's a decent-sized audience, and compare it to Snap. Snap has got 90 million users, daily active users in the U.S., so it's much bigger, and it has got more engagement. And what Twitter needs to do, going back to your question about them showing consistent execution, they really need that daily active user number to go up.
So we're going to be on the analyst calls, and we'll be listening to what the team over at Twitter and Snap have to say. Let me start with Twitter. What would it be that, I know I always put this to you guys, but what would you want to know? What would you be asking?
The tailwind from Olympics. That's a near-term event, and usually Twitter tends to benefit. So I would want to know what kind of tailwind they expect from the Olympics.
Do you expect the pandemic and the concerns that it's going to weigh on some of what might happen on the Twitter platform?
Well, so I think what the good thing with Twitter is because it's so kind of news and politics driven, live sports driven, I don't think it's going to weigh that much.
Be fine.
Yeah, it will be fine. And in case of Snap, even if people, start going out more, it won't make a dent to the pricing tailwind they have. That is sustainable because the advertisers see the value, in terms of buying ads on Snapchat.
Snap, what's the question for them?
Snap's really, how many new advertisers they have added to the platform? Is it more of the small businesses, or the larger brands are also coming on Snapchat?
Who has to be kind of looking over their shoulder? Is it some of the big social media players?
Yes, I think in case of Google, their search, even though, they have a mode and really, they have a perceived monopoly, they don't have a social media platform to compete with the likes of Facebook, Snap, and Twitter. And YouTube is the closest, but YouTube isn't a social media platform. So I think Google is the one.
It's interesting, too. Our Kurt Wagner saying Twitter's shareholder letter doesn't mention President Trump. It is technically the first full quarter without Trump on the platform. He was suspended just 1 week into the first quarter with almost 6 months of data to work with. It feels as though Twitter can now safely say that the business will be fine without the former president posting regularly.
Yeah, I think Twitter has such high engagement that really it won't make a difference,
Well, listen, thank you. I know it's a busy afternoon for you, and you breaking down both of those companies, Twitter and Snap. Our own Mandeep Singh, he is Bloomberg Intelligence Senior Technology Analyst right here in our Interactive Brokers studio. Those stocks, both of them, off and running in the after hours. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. Carol Massar in our Interactive Broker Studio. Coming up, you know we like to talk to disruptors. Well, there's a pair out there. They've co-founded a company, and they are looking to disrupt the women's swimsuit business. They're doing it. All right, we'll get to the co-founders of Somersault. They'll be with us in just a moment. First up, though, got to get back to Charlie Pellet with a check on that trading day and all that earnings news after the close. Hey, Charlie.
Indeed, earnings making a big splash after hours. Carol Massar, we've got Intel, the world's biggest semiconductor maker, giving a lackluster third quarter sales forecast, indicating its data center business continues to suffer market share losses in the face of stiffer competition. Intel now down by roughly 2%, erasing earlier gains as post-earnings optimism fades. Snap reporting gains in quarterly revenue and daily active users that exceeded analyst estimates as investments in content and creative tools lured young users and the advertisers trying to reach them. Last quote on Snap up by roughly 13%. Twitter reporting second quarter sales that did top analyst estimates. It delivered a forecast for the current quarter that exceeded expectations. Twitter after hours up by 7%. Beer, let's talk about Boston Beer. SAM on the ticker there. It cut its adjusted earnings per share forecast for the full year. Shares are now plunging after hours. Boston Beer down by 15.5%. A rebound in tech companies drove stocks to the brink of a record today. Traders assessing another batch of economic and earnings reports. S&P up 8, up 0.2%. The Dow higher by 25, up by 0.1%. NASDAQ up 52, up 0.4. 10-year yield 1.26%. Matt Forrester is Chief Investment Officer at Lockwood at BNY Mellon's Pershing, and he told us right here on Bloomberg Business Week, you can't ignore what's happening with commodities.
Coffee at a 6-year high, and coal at a 52-week high. We see lumber kind of bouncing back off the bottom. So we've had a tremendous decline in where lumber has been. It'll probably take a long time for it to recover, but all on supply issues, whether that's Brazilian frost or drop in European wind power or forest fires in Canada. All these things that are related to climate have been affecting the supply side, but it doesn't help the inflation story.
Matt Forrester with BNY Mellon's Pershing. Today, we did see West Texas Intermediate crude up 2.1% and gold up by 0.2%. Again, recapping, equities higher, S&P up by 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So recently I got in the mail a Somersault catalog. They are a company that's definitely doing swimsuits differently for women. Not just about swimsuits, they are building a lifestyle brand. So let's find out how they are doing it, because they've just been a few years in the making. Lori Coulter and Reshma Chamberlain, they are the co-founders of the direct-to-consumer sustainable swimwear brand called Somersault. Reshma is also Chief Brand and Digital Officer, and Lori is CEO and President, both joining us on the phone in St. Louis. Reshma and Lori, so nice to have you here with us. First of all, welcome to Bloomberg Business Week. How are you, and what's this past year been like?
Well, first of all, thanks so much for having us. We're really excited to be here and to tell and share Somersault's story. Like everyone else, the past year has been an absolute wild ride, but we're really fortunate to be in a space where the consumer has responded. We are, met her when, where, and how she wanted to be spoken to with truly an exceptional product. And it's in the end, it's been a fantastic year for Somersault, but not without its challenges, for sure.
Absolutely. And I was looking at some stats. The global swimwear market, and that's probably taking everybody into account, is something like $19 billion. It's a lot. Reshma, come on in on this. You guys are doing it differently. Tell us about your approach.
Yeah, absolutely. Thank you again for having us. It's all about the customer for us. We always put her first. Swimwear had been done in the most antiquated way for generations and decades, right? No one was thinking about what women really wanted. We wanted swimwear that was functional, comfortable, sexy on our own terms. At Somersault, we used 10,000 women's body scans and 1.4 million measurements to really define our fit. And then we want to speak to her in a way that she wants to be spoken to. We want to see ourselves reflected in the marketing that tells us what we should wear or give us ideas. And so we've recently launched our Everybody's a Summer Salt Body campaign that really showcases the incredible diversity that our customer represents. And in the end, we do it all for her and are inspired by her.
Well, and it's interesting, Lori. I mean, you've been in the swimsuit business, before. You understand it. You've seen different cycles. Both of you understand it. I mean, I was thinking about preparing for this. It's all about fit fabric. Everybody who's ever gone bathing suit shopping, swimsuit shopping, it can be an incredibly frustrating event because typically it's not always for all kinds of body sizes. Your approach is, and having looked at your catalog, I was kind of blown away. You really embrace everyone who's out there.
So really our goal all along has been to inspire joy in the lives of our consumer. And if you think back to how we all felt at the beach as children, it was really about engaging with life, fully having fun. And a swimsuit should be fun. And it really had been done in this antiquated way that Reshma referenced, over-sexualized and dated, by the way, that doesn't look very modern on social media in the way that many women are finding brands today. And so there was just such a huge white space for us to go out and present our product in a modern way that really resonated with consumers. And we're really grateful to see, just how much the brand has taken off. And by the way, we're doing it in the right way, across the board, from an environmentally friendly approach to the way we're presenting a diverse set of women, in every way.
Well, and it's interesting that you talk about, you're using recycled or recyclable materials. I've been talking to chief sustainability officers at Walmart, at Cisco, at a lot of different places. This is increasingly a part of the DNA of companies. Reshma, and am I saying your name correctly?
Nearly there, Reshma. Yes.
Reshma. Okay, I want to make sure I had it right. I've said it a couple different ways. Reshma, you are the chief brand officer. How much does your consumer care about not only great fit and function and looking good, but how much in terms of what the company stands for and how they make the product? How important is that?
Well, eco-friendliness and sustainability, we believe, are table stakes, but we also believe in working towards a not perfectionist approach, if that makes sense. A lot of people have, big bars that they cannot reach, and then the consumers can kind of sniff out inauthenticity. At Somersault, it's all about being incredibly honest with our consumers, saying, hey, give us suggestions to do better here. We're asking the right questions to all our vendors. We're focusing on sustainability and eco-friendliness and sharing kind of the true nature of where we are in our journey with our consumer. It's really not about perfectionism, and this is truly a unique approach at Somersault. Whether that's about inclusivity, whether that's about sustainability, it's a truly human approach, because any company that says that they're perfect at this is not really being authentic. And we really believe in being honest and truthful with our consumer as we kind of navigate this journey together. But it truly is table stakes as companies begin to kind of become the next generation defining businesses.
And you're truly growing. We're going to get into that in the next block. Talk a little bit about your growth rates and the investors that have ponied up money to support you guys in your venture. So we're going to come back with the co-founders of Somersault, Lori Coulter and Reshma Chamberlain of Somersault, joining us and staying with us. Right now, though, let's get back to World and National News and Nancy Lyons. Hey, Nance.
Hey, Carol, the Biden administration is laying the groundwork to spend roughly $52 billion on semiconductor research and manufacturing. This is as it's waiting congressional approval of that funding. Commerce Secretary Gina Raimondo says we need to act quickly to address the chip shortage.
We need to incentivize the manufacturing of chips in America, and so we are very focused on putting the pieces in place so that can happen.
As part of her strategy, Raimondo has brokered a series of meetings between semiconductor manufacturers, their suppliers, and their customers, including automakers. Senior administration officials say those meetings helped ease mistrust among them. The White House is accusing China of stonewalling the WHO's investigation into the origins of the coronavirus pandemic. Press Secretary Jen Psaki says China is not living up to international expectations on transparency.
We're deeply disappointed. Their position is irresponsible and, frankly, dangerous.
Psaki says the WHO is still trying to determine if there was a lab leak or an accident at the Wuhan lab where the virus is believed to have originated. China says it cannot share all of its data due to privacy concerns. The NFL says teams with COVID outbreaks among unvaccinated players will be forced to forfeit games if they cannot be rescheduled this season. The team responsible for a canceled game will be responsible for the financial losses. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Masser in our Interactive Brokers studio. Joining me right now is Charlie Pellet, once again, of Bloomberg News. This story caught my attention. It's by Stephen Mim of our Bloomberg Opinion group here. So it's an opinion column, and he's taking a look at the wedding boom that seems to be going on, Charlie, post-pandemic.
Indeed, and the thrust of the story seems to be that when really bad things happen, that's when all of a sudden people decide, you know what, we got to get married, and they begin to walk down the aisle. But here is the catch to all of this. He backs this up with an awful lot of evidence. One thing, going back to the great San Francisco earthquake, and they found that the number of marriage licenses issued in San Francisco in the month after the quake really took a big jump. And also there was an increase in urgent orders from jewelers for shipments of engagement rings, not just natural disasters in places like San Francisco, but also earthquakes in California, and Hurricane Hugo in Florida found much the same thing.
So it looks at, right, economic distress often, dampens people running to the altar to get married. But what's interesting is, too, and that in boom times, you start to see people, go up and get married increasingly so. What's interesting is some data that's pointed out in this column says that the Great Depression profoundly suppressed marriages. A recent study that examined the 20% decline in marriage rates from 29 to 33 determined that this drop was a direct consequence of economic hardship, with the biggest declines in marriage rates coming in areas hardest hit by the calamity. Interestingly, though, Charlie, is that the study found marriages consummated during economic downturns actually proved longer lasting than unions in periods of relative prosperity.
Well, 5 or 10 or 15 years from now, when you and I are working together doing this story again, it will be very interesting to look at the number of divorces as a result of working from home. You're cramped up, you're home together, and we'll see how those numbers play out from now. Marriages come and go, divorce is forever.
This is a fun column. All right, Charlie Pellet. Wise words from Mr. Pellet. This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Lots of earnings after the bell. We begin with Intel. It did deliver a lackluster third-quarter sales forecast, indicating its data center business continues to suffer market share losses in the face of stiffer competition. Intel shares now down by 2.6%. Snap shares are surging 14%. Snap reported gains in quarterly revenue and daily active users increases that did exceed analyst estimates as investments in content and creative tools lured young users and the advertisers trying to reach them. Twitter reported second quarter sales that topped analyst estimates. Has also delivered a forecast for the current quarter that exceeded expectations. Twitter shares, they're up now by just about 7%. It was an up day on Wall Street with the Dow, the S&P, and NASDAQ all advancing today. We saw the S&P 500 index advance by 8 points, up by about 0.2%. Tech stocks, by the way, leading gains in the S&P. NASDAQ up 52, up 0.4%. NASDAQ 100 index up today by 0.7%. The Dow up 25, higher by 0.1%. 10-year yield 1.27%. Spot gold up 0.2%, up 3.24 the ounce to 18.06. And West Texas Intermediate crude up 2%, 71.74 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, appreciate that update. I want to get back to the co-founders of Somersault, the direct-to-consumer sustainable swimwear brand, really expanding, though, into a lifestyle brand. Lori Coulter and Reshma Chamberlain are the co-founders, and they are still with us on the phone in St. Louis. Lori, it's Bloomberg. We like to know about a company's velocity. Give me an idea. You started back in 2017, May of 2017. So here you are, 4 years in. Tell me about the growth in the business that you've been seeing.
Well, it's been an absolute rocket ship and a pleasure just to be part of something that's so much bigger than any of us are individually. But we've seen that rapid growth that puts us in the top 1% of venture capital, that consumer-facing startups, worldwide, which is just phenomenal. And we, continue to experience 100% year-over-year growth through 2020. Through the COVID year was just unbelievable, and are seeing that kind of same accelerated pace throughout 2021 year to date.
So, Reshma, does it stay digital? Are stores likely at some point?
Well, it's all about giving our customers unique experiences. So when we think about retail versus digital, it's all about new and unique ways in which our customer can interact with our brand. So when we think about retail, we really think about truly experiential retail, where we can provide something more than just commerce, where we can provide placemaking, community building, and creating a true experience for our community to connect with each other and with our brand. So when we think about retail, we're really thinking about creating something extremely new, fun, and a concept where we can blend hospitality and retail.
What does that mean? Does that mean stores eventually down the road?
Yes, it absolutely means stores down the road. It's really interesting to think about D2C 1.0 and 2.0 brands that had to build stores to acquire customers. For us, we really had incredible, thoughtful customer acquisition, incredible organic growth. So when we think about retail, it's going to be about placemaking, and we're really excited to take that next step.
What's the best way to do that? And Lori, maybe come on in on this. Is it to do it as standalone, your own stores, or is it to do it as shops within major retailers or department stores, or a little bit of both?
I think we're committed to the vertical retail path. So that would be standalone stores for the most part. And again, it's about that one-to-one relationship with our consumer moving forward. And as Reshma mentioned, creating that place where she experiences Somersault as a complete lifestyle. And so we're really excited to take it to the next level as we think about, the next 12 to 18 months.
Well, Laura, what is that next level? Because I mentioned, you're a swim wear brand, but you really are looking to do it. And you did during the pandemic. You moved into pajama, things that people were needed at home at that point, and you pivoted pretty quickly.
So what's interesting is we had already entered many of the apparel categories that accelerated through COVID. So we were fortunate to already be in pajamas, cozy, comfy loungewear, athleisure, as well as everything cozy cashmere. And what's interesting is that sometimes people like to refer to it as a pivot, but we were actually already in those categories and were able to build it out due to our supply chain speed really rapidly. And certainly, over 35% of our revenue comes already from apparel. And so as we continue to build out new categories, that percentage continues to climb, which is phenomenal.
Where do you see it all going, Reshma? Is it eventually an IPO, or how do you guys continue to, provide the momentum, provide the capital? Can you continue to do it in the private markets?
Well, for us, it's really about building the next generation defining brand and really kind of marching to creating that brand that people have in every corner of our wardrobe. For us, it's not about, Lori and I built 2 businesses before, and we never set out to do something small. For us, it was really creating a brand that people in my home country of India can recognize, and in the smallest towns in Missouri know about Somersault. So for us, it's about infiltrating essentially every wardrobe in America and the world, and that's what we're here to do.
Right, and this everything that you're doing, Lori, is on a global level, correct?
Yes, we are selling globally, although on a little secret, watch what we have coming in the next few months. So from that perspective.
It sounds like more is coming. Hey, one thing I wanted to ask both of you, it's something that we talk about a lot on Bloomberg and certainly within the venture capital world about, the lack of women in senior VC positions, the lack of capital often for women-led or women-created businesses. Lori, what's been your experience?
Well, I think what's fascinating and most people don't realize is that only 3% of venture capital dollars go women founders.
Right.
And, certainly even less is going to founders in the Midwest. So we're really proud of the fact that we've been able to break through. And I think what investors need to understand is that women founders that are breaking through and getting to the level that we're at with Somersault from a traction perspective, these are truly breakout companies, not only from a revenue perspective, but also from, just the drive to break through and talk to the, hundreds of investors it takes to really to circle that dollars. Now, what's interesting now is that Somersault receives, almost an endless number of inbounds in regards to investors looking, to fund the next level of growth for Somersault. So from that perspective, we've really reached the threshold, but we believe it's our job as women founders to really forge the path for those that are coming from behind us and to really help draw attention to the fact that this 3% number has got to change.
Yeah, absolutely. I mean, it's just kind of unbelievable, the untapped network and certainly funds going into women-led businesses. Hey, Reshma, one thing I want to ask you guys, as Lori reminded me, you guys were already in pajamas. You guys, have sweatshirts, you have hoodies, you have a lot of things that really appeal to the consumer currently. Just got about 35, 40 seconds left here. What's the biggest growth part of your business when it comes to the product lines?
Well, for us, it's all about surprising and delighting our consumer. Our pajamas do incredibly well. Loungewear, activewear, intimates are incredibly successful for us. So it's not about just one category. As we mentioned, it's about owning every single corner and every drawer in her wardrobe and providing joy through every garment and making it eco-friendly and stylish while we do it.
Well, you're hitting on a lot of things that we know are really, really important to consumers right now. I hope you'll come back and let us know how things are going and how, as you continue to expand, what's going on and just give us an update. Lori Coulter and Reshma Chamberlain, they're the co-founders of Somersault, both joining us on the phone in St. Louis. Coming up, Sound On with Joe Matthew. Joe, what's on tap?
Well, we're going to start with chips. You've been talking about Intel a little bit here. Congresswoman Haley Stevens, Democrat from Michigan, part of her district, Carol, is in Detroit. And she's been watching the impact of this chip shortage, not just on cars themselves, but on jobs. 13,000 people waiting for this to be resolved. We're going to start the hour with Haley Stevens on Sound On.
All right, looking forward to that. And a headline crossing, BlackRock and Canaccord said to be in advanced talks to buy Bridging Finance, a private lender that was seized by Canadian regulators amid an investigation of its top execs. This is according to people in the know. Coming up, Sound On with Joe Matthew. This is Bloomberg.